So the market is correcting, rates are still hiking, but we've just had data come out suggesting that maybe the worst is behind us and the correction is almost over. What's more is that government incentives have not stopped, and there's one that just got brought forward and it applies to you today. So if you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, right now, we're in the thick of it. When it comes to media fear-mongering, we've got all these analysts coming out and economists suggesting that the market's gonna collapse by 30 or 40%, but we've seen rates go from 0.1 all the way up to where we are now, and we've still only seen a bit of a decline. Now, yes, we're probably gonna have some keyboard warriors come in and suggest that the worst is about to happen. And the truth is, there's so much crap that's happened over the last 8 or 9 years. If I'd heard every single time there was something bad that was going to happen and it stopped me from investing, I definitely wouldn't be in this position. Now, I try and listen to the smart money, where those big people are putting their money and understanding why they do it, because success leaves clues. And what I've realized is that as long as you have a good strategy, you have good financial education, and you have the right team around you, you will do quite well. And if you look at it long term, then you will definitely do really well. Now, there's a scheme that got announced earlier this year, but it was meant to come into effect on the 1st of January 2023. But instead, we pushed it forward and now it's available as of today. So why is this the case? I'm going to walk you through exactly what this means. So the regional first home buyer guarantee was meant to come into effect on the 1st of Jan, but now it came into effect on the 1st of October of 2022. It's 10,000 spots, and what the guarantee is that you only have to put a 5% deposit in and the government will put the rest of the 15 and guarantee your position, which basically means you don't have to pay for things like LMI. And when you go to a bank and you ask for a loan at 90% versus at 80%, you're going to get two different rates. So at 80%, you're probably getting a more favorable interest rate, which allows you to continue moving and get a better cash flow. So did the government just bring this in because the housing market was correcting? Well, look, now as much as I'd like to speculate on something like that, I believe it's actually more to do with affordability. We've had regional properties grow a lot more than capital cities, despite all the haters suggesting that capital cities grow more than regional properties. But in this case, over the last couple of years through the boom, we've had regional properties absolutely take off. And now in the local areas, it's a lot harder for people to purchase property to live in. So what happened was they started renting. The rent started taking off, and in normal cyclical behavior, as interest rates go up, we also have rents go up in Australia. Right now, we're suffering from a 16-year low vacancy rate, which means it's very difficult to find the right property to actually tenant. And in some of these regional areas, there's basically no properties available to tenant. So if you want to live in that area, you have to buy, or unfortunately, you're gonna have to live somewhere else. Now, a big factor that contributed to such a disaster in regional areas, as well as many parts of Australia, is because we had the lockdowns. The lockdowns caused a lot of people to think,
I don't want to live in a shoebox anymore. I want to go and live somewhere I can get a house.
And so people started moving away into the regions, and they could find a property for 300 or 400K, but for the same price, they weren't even getting a 1-bedroom apartment in the capital city. So we started having a lot of this migration go out into these areas. Now, we already know that the supply in these areas were already so low. I've been investing in regional areas for like 8 or 9 years. So I was very much aware of what sort of development was coming in, why I was targeting these areas, and the pandemic really was accelerating this growth. It was coming in and saying there was so much more demand for the relative supply available. So a guarantee like this or a scheme like this, what could it mean for, say, properties in that area? Well, the first thing is that it's going to allow a lot more people to afford to be able to buy. Now, one thing that I noticed as part of their eligibility was that they stated that you can't live in a capital city in order for you to apply. Now, I'm not sure how they were going to force this or how they would actually go about doing this, but when you actually think about it, some regional areas that are still considered regional, like Greater Sydney being, Newcastle, Central Coast and things like that, they still have a median value of like $700,000 or $800,000. So people living in those areas could definitely go and downsize and go into a different area that has a median value of say $400,000. That's still going to cause a large portion of migration out from some of the more expensive areas to the more affordable areas. I've said on the channel before, I like to purchase my foundational property portfolio in affordable properties. I'm not talking about rundown properties that can't tenant themselves or something that's going to blow over. No, I'm looking for good quality homes, brick homes only, and I'm looking in areas that make a lot of sense to me when it comes to rental demand as well as incoming supply. Now, short term, on the surface of it, I think it's a pretty good move. It allows more people to actually go and afford their own property so they can get in. But again, you're leaving a lot to the government. You're trusting them a lot. I'm not sure how comfortable you are with that because they're guaranteeing 15% of your loan. If they suddenly turn around and say, well, we want to sell the property, what does that mean? Now, the chances of that happening is very unlikely, but it's something to consider. The other part to this that I'm very skeptical of is it's going to cause a lot of people to go ahead and purchase their properties, which I'm not always a fan of, because most people should never purchase their own property. I truly believe that, because the amount that you make versus having a 30-year loan and then not having any sort of lifestyle and balance in your life means you could be living with a lot of financial stress. I'd rather grow my wealth and maintain my lifestyle by rent vesting. That's what I'm doing at the moment, but it's not a strategy that I share uniquely. There's people like Robert Kiyosaki as well as Grant Cardone that also believe a similar thing. Do I think the guarantee is going to help push prices up? Yes, I definitely think so. I think it's going to bring more eyes into these areas, more demand into the areas, and I'm sure there's going to be people sitting there that are thinking,
well, I've been renting for this long. If I can afford a property now 2 hours that way, yeah, maybe this is the chance to take.
So I think it's going to actually push prices higher, or at least put upward pressure on it. But the timing of this is impeccable, because CoreLogic data has come out and suggested that the rate of these corrections that we're experiencing Australia-wide is starting to soften, which means we're starting to ease in how quickly we're falling in prices. Now, this could be a short-term sort of blip, and it might be that it was a one-off month and it's going to increase, but I think it's more to do with the fact that nobody really wants to sell their property for 10% less unless they really have to. So what I mean by that is, if you purchase your property at the start of this year and then you decide to sell now, you're probably getting 7 to 10% less in some areas of Sydney. So if that's the case, you're probably going, well, why would I want to do that? I don't need to sell. So it means supply is being held back. When supply is held back and there's still 10 people looking for the 5 properties, that is why we still see prices going up in some areas. Now, the guys at CoreLogic are suggesting Q1 of 2023 is probably the bottom of this market. That means we're anywhere between 3 and 6 months away from whatever the bottom could look like. And based on their predictions, as well as what they're forecasting, it isn't even going to look that bad. When you see the economists from 2020 coming out suggesting a 30 or 40% drop, they're coming out again and saying the same thing. I'm not sure how anyone could believe them this time around versus last time. And I know it has a bit of a delayed effect on household prices. However, we've also got to break this myth that we think as interest rates go up, it automatically means prices go down. The most important part to this is that there's not just one market in Australia. There's numerous markets, and there's some that are really growing at like 5, 10, 15%, and there's others that are still dropping. The other part to this is in 2002 to 2008, we had rates increase 22 times in 6 years, okay? We went from 6.3% all the way up to 9.5%, but in the same period, 6 out of 8 capital cities doubled in value, and we had some regional growth of up to 250 to 300% growth. So if you're in the camp that truly believes this one thing, which is interest rates go up, prices go down, you are going to be in for a big surprise, because we've seen it here in Australia before, and I know people are going to say this time is different. There are elements that change in every cycle, but the cycles remain the same. If you can adjust your thinking, get in touch with the right people, and have the right communication with the right team, you are going to do really well. If you need help with the buyer's agency side of things, to have someone streamline the process of finding your property, locating and doing all the research for you, walking you through all the way to settlement, and then having those constant portfolio reviews, definitely reach out to me. I run a buyer's agency. It's called Search Property. I'll link my website down below, and I'll also leave my email in the pinned comment down below. But what do you guys think is happening with the regional markets? But if you guys have enjoyed this video, then definitely smash that like button, subscribe if you haven't, and share this with someone who thinks that interest rates go up means property prices come down, and you may have learned something new. I'll catch you guys in the next one. Thanks, guys.